We're in the middle of March now. We are coming right up on April, and that means for everybody at home, tax season is upon us. In case you needed some tips, in case you needed to know, hey, this is what's heading your way, we have an expert in today. We have Len Hayduchok joining us today. And Len, first of all, give us your credentials when it comes to taxes. What do the people at home need to know about you?
Well, I'm a certified financial planner, and I'm not a specifically tax preparer, but as a certified financial planner, I make sure that all the different pieces of a client's financial picture work together. We call it the 5 disciplines of financial planning: generating income, building wealth, reducing taxes, neutralizing risk, and leaving a legacy. So taxes are an important component of the entire planning picture, trying to reduce them when possible.
Kind of the health of your wealth, if you will,
Exactly.
is kind of what that rolls into. We've got tax season coming up. You know, some people have finished, some people haven't. Let's start with, is there anything that can still be done this late in the game that might have a tangible change to how somebody taxes looks this year?
Yeah, the only thing people can really do for 2025 tax season here in 2026 is maybe make an IRA contribution that is effective for the 2025 tax year. They have until April 15th to do that, but you can only do that if you have earned income up to the amount you contribute up to the maximum of the IRA. Some folks also may be interested to know if you have a husband, wife, or 2 spouses, you can have one spouse earn enough income to allow both spouses to contribute to an IRA for the 2025
I think that's a key piece of information to know there, because that really does change how much, if one is either already retired or one's a stay-at-home mom, whatever it might be, it gives you a little bit more you can put away there.
Correct, yeah. And if you have retirees, one spouse might still be working, the other one retired, or the one that retired might be able to also contribute to an IRA, which would be important if that couple will be in a lower tax bracket when both spouses have retired and have less income.
Now let's look ahead to how somebody might be able to put themselves in a good position this next year, because really this is a year-round, pay attention, we need to be doing the right things from day 1 of the year all the way to day 365 of the year. So what are some of the things people can do to put themselves in a better position going into this next tax year, in case they're not quite happy with the way it all worked out this year?
Yeah, you make a really good point, because a lot of times people will prepare their taxes and they'll be surprised they owe a lot of money, or they'll be like, oh, I'm getting a refund, which is nice, but when you get a refund, really what you did is you gave an interest-free loan to the government. So you really need to be thinking about how can you reduce taxes, and it's not simply a focus on how much refund do I get, but it's really how do I reduce my taxes, and that's potentially a long conversation, but there's really a few things to think about. One is, how do we shift our income to years when we're in a lower tax bracket? Because that's really what it's about. We can't eliminate taxes on income, but if we can shift our income to a year when we have less income, that will give us an opportunity to pay taxes at a lower tax bracket. The classic example is IRAs. I think all our listeners know when you have an IRA and you take a distribution, you pay taxes on it. But the question is, how much taxes do we pay? So if I'm in a lower tax year this year for whatever reason, maybe I'm working, I got laid off for part of the year, I'm in a lower income. I may want to take some of my IRAs, convert them to a Roth IRA, pay taxes now, and never pay taxes on them again.
So you can really, you can take advantage of the fact almost, hey, it was a down year, but we can move this and that around, and on the back end, it's going to save me money, and maybe at a time when I really need that money.
That's correct, yes. So that's really important to look at your tax brackets, because that's ultimately what the opportunity is with IRAs. When people are working, they're earning more income, they put money into an IRA so that when they eventually retire, earn less income and are in a lower tax bracket, and take IRAs from their accounts, or it could also be a distribution from their, not just their IRA, but their 401k, they pay a lower tax bracket.
If you are a classic W-2 worker, that's what I am, that's what a lot of people happen to be, is there a best advice on how much somebody should be, what their deduction should be? Because you mentioned you don't want to be basically giving the government an interest-free loan. You don't want to have a bunch of debt at the end of the year in taxes either. There's some middle area there that's probably the target.
My advice to folks is to really try to be as close as possible to getting no refund, and also not owing any money, but maybe erring a little bit on the side of a refund because no one likes to pay that, right? So, and for most folks, quite frankly, there should not be really any tax surprises. If you're a W-2 employee, you know where your income is every year. You might get laid off, may get a bonus, but you can figure that out.
Generally, they're pretty simple numbers. A little more complex once you get into business owners or people that are, have their own LLC or something, I would imagine.
Correct. And a lot of folks, they're retired. When you're retired, you know what your Social Security is. You know what pension you're getting if you have that. So there shouldn't be any surprises. The only surprises for folks other than, say, business owners are individuals who have a lot of investments, and you may have a capital gain from an investment, which you can try and plan for, but you can't always plan for that because sometimes people have a mutual fund.
Sometimes you just got to take it at the time, and that's how it works out. Well, Len, how can somebody find you if they want to come patronize any of your many services there?
Well, the best way to get a hold of us is to go to our website, dedicatedfinancial.com, www.dedicatedfinancial.com, and they can contact us through that. They can also call us at 302-500-2242. That's our local number in Delaware. People can give us a call there. They also can call us on our toll-free number, 866-US-SENIOR. So there's a couple ways to reach us there.
That's a fun little number there. Well, thank you, Len, so much for joining us. Ladies and gentlemen, remember, we are coming up on tax day. You do not want to get behind. Make sure you get all that stuff taken advantage of, buttoned up, crossing the T's, dotting the I's, and maybe next year, if you listen to some of Len's advice, you can be in a better financial situation as well. We're going to take a break, but don't go anywhere. There's more Coast Life after this.